Martin, the narrative there, we're going to debate this for the next 3 months about whether we're going to see continued rising inflation. The consensus seems to be from everybody that joins me is yes. You have a point about growth. Everybody talks about stagflation, in other words, rising inflation and crashing growth. You say we must be brave and look through. You do not believe that the growth drop will crash on a permanent basis. Why?
Well, it's basically simply the drag from the Delta variant. We were going to have quite a phenomenal summer in Europe and in America, but then the Delta variant came along and was impacted almost all economies in July, August and September. And we can see it in the last 2 monthly payroll reports, much weaker than expected. And we need to see dramatic levels of job growth. And the economies now are fully reopened. We're shifting now from pandemic to endemic. And the vaccine rollout is 6.5 billion units. It'll be 10 billion by the end of January. And this is giving a fantastic boost to growth for Q4 and Q1. So I would not get hung up on low growth at the present time. It's actually future growth levels, and we're very positive on future growth levels over the coming quarters.
Then how high can future inflation levels go, Martin? I started the show with coal up 70%, which in some ways is idiosyncratic. It's hoarding. Aluminium, the highest since 2008. And oil up 14-15% in the past 30 sessions. Is that what's ultimately driving the inflation narrative at the moment, the energy component? Does that endure?
I honestly don't think it will endure, simply because there is supply constraints and supply can actually be switched on. So if we just look at OPEC has a very good chance to increase supply next year. Russia has, even America, and then some of the states that have not been around for quite a long time, like Libya, Iraq, Iran. So supply can be switched on oil, and none of the major producers want $100 or greater than above or $100 oil, because it will create significant difficulties for them going forward. But the one big thing that everybody's missing on inflation, we've spent 30 years trying to find inflation. Now we have a little bit of inflation and everybody's running for, to jump onto the table. This should be welcome, not actually something that is going to be destabilizing for markets.
Hurrah! Somebody finally that comes on the TV and says this is why we had 10 years of QE. Well done, Martin Malone. How do I trade around it? A little bit of inflation. Is 5% inflation healthy? What is a healthy level of inflation, Martin? And how do I position for that the genie that's just come out of the bottle?
No, I wouldn't go as far as 5%, but levels above 2% are good. A 3% level would be excellent for asset prices. And then that would be with global growth at around 3% as well. So we would have nominal growth of 5 or 6%. That's a very good environment for any company and any economy to be involved in. The one thing is that we are basically shifting from mass dislocations, and we're trying to get back all the gaps in labor markets, in commodity markets, in consumer markets. And that's going to just take time. And the Delta variant, as I said, disrupted that over the last 3 months. And we just have to be a little bit more patient about the recovery settling itself down.
Patience is something that bond traders are not famed for, and equity traders, I suppose, are a little bit more used to. I can't talk for FX traders. So, Martin, cross the assets for me on you think that we'll get back to 3%, we'll return to 3% inflation with around a 3% growth level. Tell me what I got to do in bonds, first of all, with your scenario 2022. Quick call.
Bond markets, we need to see higher yields. This is very good news. We do not need to see lower yields. Lower yields is bad news. It's deflationary, disinflationary. So 2% 10-year bond yields in the short term. We should be able to see levels above that. Obviously, we don't want the speed trade to go on because it'll disrupt factors. But 20, 30 basis points in yields higher from here over the next 4 weeks is fine. And then above 2% early next year.
Martin, in 30 seconds, given the scenario you've laid out for me on oil, sir, do I fade the move, or do you think we spike above 100 before you fade the move in oil?
No, you can fade the move from now. I think oil prices, a very good oil price is the current level. There is no major supply justification for larger oil prices larger than here. Demand has recovered very nicely. It's around 98 million barrels a day. It was 90 last year. Very good news. The producers do not want $100 oil.